Well, hello there. It's another episode of the Market Shenanigans. This time it's week 47, and I think I didn't have a very good week. I'm not quite sure. I'm pretty convinced that I made some mistakes, and it goes hand in hand with these new rules and stuff because I do have a couple of lessons. Like when I go into my week over here, I have three lessons. That doesn't happen very often. And whenever I have some big changes to my system and like the way I approach things, that's when it gets a little volatile and I don't necessarily manage to stick to rules very well. But this week was very, very fruitful for me because I have discovered some super, super, super sneaky FOMO in my approach. And I'm going to talk about it a little bit, and I think this is going to have a profound impact on how I trade going forward. So, as always, let's start with last week. I remember last week sucked ass. I mean, usually when there's a lot of trades, it's there's gonna be a lot of mistakes too, and indeed there was. Not much went well. I remember I was not very happy with how I traded. I struggled with the new S&D rule. Uh, I did implement supply and demand in a very specific way into my trading, and I suffered with that a little bit. But I did come up with ways how to change that and how to have those rules super simple. And this should not happen again. It might happen again, but it should not happen again. I'll just train myself on it. Anyway, most entries were too early. Yeah, a lot of E mistakes, and this beautifully uh, represents my point here. Like, whenever there is a new rule, I kind of pay too much attention to that new rule, right? And here the new rule was that I wanted to see price break above the supply line. And that was kind of like, I focused on it too much, you know? And here I saw it break above and I was like, yes, sir, let's get an entry. But actually, what I want to see is I want to see price break through supply convincingly, okay? I want to see that demand is really overpowering supply at this point, and that's what I draw here as well. I want to see this big move through and then getting involved in that subsequent reaccumulation. Same thing over here. Yes, there is some supply here, but this is not what I want to see. I want to see a break higher and get involved here. I want to see big move, okay? I don't want to see this like everything here, these little thingies. My expectation should be redistribution, and I should rule out redistribution. And right now, this looks like redistribution. It really does. It looks like it liquidated the high, and it's gonna fuck off lower, even though it's doing this. Like, I would not trust this. And same here, right? This one is a little bit weird. Like, oh yeah, and this is a beautiful example of what one of my lessons this week is. And that's like whenever I have a reaccumulation that happens in this way, where technically, in order for me to get the green light to trade this, I need to see a break through this level, right? And this level, it's pretty damn high, right? I mean, this is the high of the entire reaccumulation, and this is what we were taught in the past by Anton as the free money zone. And we usually we usually want to get involved in the reaccumulation, like let's say somewhere over here, or whatever, so that we have space to the floating supply, right? And once price is above the floating supply, I don't know if anyone else considered it this way, but I certainly did. I thought when it goes above, it's almost not valid anymore. You know, like it's almost like this is where I should be taking my profits. But what I have noticed lately, paying a lot of attention to how these reaccumulations play out, like my free money zone, or let's say my edge zone, I would call it, is if this entire thing is the reaccumulation, right? I usually reserve the bottom part to some kind of stage one that I want to see a breakthrough. And then, like, my free money zone is not necessarily just this towards the floating supply over here. It's more like, it's more like this, okay? This. Because when we look at the higher time frames and stuff, the wildest moves really happen through levels that are meant to be liquidated. And those are usually the violent moves that just like go something like this. And those are the moves we are trying to catch, right? That's why we pay so much attention to preceding stage two being strong, to the momentum being in the market, and all of that stuff, right? Because we expect this kind of price action. So we should do everything in our ability to filter out for the best setups that tend to play out like this. So this is gonna come hand in hand with the lesson today because I noticed this week for probably the first time that whenever I have a reaccumulation that forms in this way, I almost feel bad a little bit. I feel FOMO because I'm like, well, now I need to like this printed so badly that now I need to wait for this point to get liquidated, to get a buff, to get involved, like so all of this opportunity is gone for me, and I felt bad about it. And I would maybe talk myself into like, instead of seeing this as the supply and the breakout level, I would maybe like zoom into this on the 10-second to see like some kind of break higher here, some kind of DMB or whatever, and then I could maybe get involved here, or I don't know, maybe something like this, and I would get involved under a level that I was supposed to get involved. I would just FOMO into it. Well, that usually really sucked because those trades are not ready, right? So I'm super, super happy that I noticed this in my own trading, and I'm gonna get back to it a little bit later when I go over those lessons, okay? I'm going to really hammer that in my mind. And I also traded a high time frame stage one, but I actually looked at this, and I think this is still valid. It's I really understand why I traded here, right? So here we have again a reaccumulation, breaks down, and it's in my opinion it's pretty clear that this is the level that needs a break higher, right? So the moment we got this, and this is by the way, this is what I talk about when I mean a strong breakout. Okay, like a candle like this is awesome. This is proof to me that this wants to go higher. Well, I would probably try to get involved somewhere over here. Maybe I will even take a loss, but it's okay. And then it fails, right? And my entire idea is invalidated. And here, this thingy, this thingy is a sign of loss of momentum. Definitely. Like, no question. Like, if this was a market that wants to go higher, it did everything it was supposed to, and it was supposed to go higher here, right? Whoa, what just happened? Huh? Lol. Okay, well, that was a little bit weird. Okay, so back to this. The market has proven to, and it did everything to go higher, and instead it grabbed liquidity and it fucked off lower. So when it does this, when it liquidates and goes lower, what does it want to do? Well, it's gonna get seek liquidity on the bottom, so probably below some low. So I would immediately mark up this and expect this to get liquidated, which it does. And from here, if this was my E, this would be my last valid setup, right? I would take this on an E. So that's why I thought, okay, well, this high time frame trade is tapped in, so it's valid, and now I can outperform it on the lower time frame. And yeah, kind of. But I think the one thing that I kind of skipped was the paramount importance of this happening. If this didn't happen, and let's say that this push would peak out below the floating supply and it did this, I think it would be a much, much better setup. But this already was proof of loss of momentum, like momentum fizzling out. This basically makes the whole thing a stage one. I think that is the bottom line of all of it. The moment this happens, it's a stage one. Like, okay, the moment this happens, it's deemed a stage one. Also, I've already talked about this in the past, and this is one of my rules for reaccumulations. I try to trade the first valid momentum cycle out of a reaccumulation, right? And momentum cycle is price trending strongly above the 1020, which happened here, I would say. So this is already, if we don't pay attention to the candles, we just pay attention to the moving averages, right? So this is a tunnel. It goes something like this, and now I'm just waiting for it to go hard, and it goes hard here. This is reaccumulation, and the expectation is to go higher. If this momentum cycle fails, I'm done with the entire range. So that's already a rule I had in the past, and yeah, that should probably like keep me out of this. Okay, well, that was a bit of a long intro. Results last week were really bad. I could have been up plus 4.4, so I accumulated like over 6 hours of mistakes. It kind of sucks, but it's all part of the learning experience. No point getting mad. Just always try to get better. That's the entire point here. So I have quite a few trades. I think like what, nine, or what is this? One, two, three, four, five, six, seven. Okay, seven. But quite a few of them I didn't take. And why was that actually? Oh yeah, yeah. Because I wasn't trading at the time. I was traveling or some shit. Anyway, let's get into the trades. I'm kind of excited. But first things first, I do have oh wait. We actually do it like this. Okay, so starting the week on Monday. Before I do that, I'm just gonna check all of this stuff. Is there's anything that I should really pay attention to? Yeah, this is all good. This is all good. I did make one change though. I made one little change, but I think I'm gonna see that lower. Anyway, let's start this off. So Monday, some CAD news. I really don't think this is important. Just gonna drink a little bit. Yeah, CAD news. Who really cares about that? So on my watch list, quite a few things. So let's go over the context here. So UJ on my watch list here, it looks like it's breaking out on the weekly. Looks pretty decent. Daily active momentum cycle, so deserves to be watched. NAS 100, still very bullish on the weekly. Daily, still above the demand here. Very much like, yeah, this is still very much a bullish market for me. Silver, silver very strong, I think. Yeah, weekly pulled back into the rising 1020, very nice. Some kind of stage one here, some breakout and a pullback into the into the rising 1020. By the way, back to that rule with the reaccumulation, this I would already see as a active momentum cycle, right? This is the start of a momentum cycle, and if this one fails, I'm probably not gonna watch gold for a long time because it's gonna make this a stage one, and I'm gonna need to see a break above. Actually, that was silver. And I think same goes for gold. Yeah, but gold is a little bit weaker, but still valid. A little bit weaker, but it's pretty clear that silver is leading. All right, so that's that. Most things need demand to show up. Yep, expecting a no trade day and calling it a day at 16:15 and going to practice. All right, but I do have a lesson here. Yes, some interesting lessons from the Magni Man. So I've been very strict about this thing where I stick to one mentor and one mentor only, and that was Anton. And I was just learning from him, and I would not allow any other ideas to infiltrate my mind, right? But recently, I'm already quite, what's the word? Quite certain about how I want to trade, so I'm not as afraid to open my mind to new things. And especially when it comes to like picking stocks and stuff like that, it's very much different from what I used to do with my low time frame entries because there is this additional thing, the filtering, right? And I think filtering is a huge part. Like getting filtering right is gonna make my life so much more profitable because I'll be able to find those opportunities that are hidden below like so much trash. And one like one of my buddies shared this video with me about this stock trader from Sweden or whatever, and how he made a lot of money. And I found it very interesting because his strategy is extremely similar to what we do. He also trades momentum and momentum cycles without him calling it that because he looks at the rising 1020 EMA. And I just thought, okay, since this is someone who trades in a similar way, what can I learn from him? And what I mostly learned was stuff about screening. So let's get into this lesson here. So he trades stocks when the market is in momentum mode. So here he takes the Nasdaq as the main index, and he only trades stocks when the Nasdaq is in a momentum cycle. Okay, so the one and he looks at the 1 day. So the 1 day chart, the 1020 EMA are sloping upwards, and also the 10 EMA is above the 20 EMA. Okay, so it must be quite a strong move for that to happen. And yeah, here he also mentions that there can be quick undercuts of the 1020 for reaccumulations, but generally, uh, it needs to rise above the 1020. So one important lesson here is on the patience, right? The market won't always be in momentum mode, and it's important to skip trading altogether when the time is not right. This points out to what Anton was teaching about the seasonalities. Yeah, like he confirms this. He says that it's okay to have 3 to 6 months of no trades at all because the market is not ready. And if you trade during moments when the market is not ready, you're going to be taking losses and unnecessarily, completely unnecessarily. So patience is extremely important, and setting up these expectations of what can happen to us as traders, it's paramount to expect that this can happen. So he is just a stock trader, so he has a lot of time off, right? But if we also want to include other things, like, I don't know, checking the metals, cryptos, trading low time frame momentum strategies on Forex and stuff like that, well, we're going to have way more opportunities, but it still stands that there will very often be days, weeks, even months of no trading, and that is completely fine. We need to trade during the season and chill the fuck out during off season. This is something that I'm still instilling in myself. Like, I'm very new to this, like overcoming the need to trade, but I think I'm doing well with this, and mm, verbalizing all of these things helps me a ton because I can it when I hear it, it makes sense to me, right? It's totally logical, so I just reinforce the logic, and it makes me want to follow those rules more because I understand that they make sense. These rules are not meant to limit me; they are meant to help me succeed. All right. So just like Anton, he pays a lot of emphasis on the preceding stage too. So if it moves smoothly above the 1020 and it makes a big move, well, guess what? Big moves tend to make subsequent big moves. So if something behaves very well before our entry and then reaccumulates, that's what we want to get into, right? Because we will expect it to continue behaving in this very clean way. So I took some screenshots here of what he likes to see. Unfortunately, I don't quite like the slopes here because he has these 100 and 200 moving averages on, so it like flattens the chart a little bit, doesn't look as good. But needless to say, like it's possible to understand what's going on here. So these upper MAs, right, are the 10 and the 20. So this is all a big, big momentum cycle. And what he really likes is when price starts going sideways and gets tight. What he means by tight is that the volatility contracts. And after that, he is looking for breakouts. He's looking for big momentous moves out of tight ranges for continuations. That's what he pretty much does. So he rates this as a very, very good setup, like 7 star on a 5 star scale. Whatever the fuck that means. Always funny when you have a defined range, defined spectrum, and somebody over exaggerates by going above it, like, oh, I put 120% into this. Like, what does that even mean, bro? No, never mind. This is just something silly that gets me aggravated. Anyway, so here, big move, go sideways, builds a tight range, and then boom, breaks out. I think I have the follow up over here. Do I? Nope, not really, but it's fine. This is another one. Big previous move, goes sideways, holds above the 1020. It can cut like this. So in his opinion, this is holding. It gets tight, and if there's a breakout here, he's gonna follow it. What about this one? Here, this one is a little bit worse, but it's still good. 1020 goes above, holds above the 1020, right? And pay attention, this is the daily. So he pays attention to the daily momentum cycle. That's what he cares about. He uses the weekly for context, I guess, but not necessarily for momentum cycle rules. It's all about the daily momentum cycle. Okay, so 1020 holds as it goes sideways and builds up a tight range, and then when it breaks out, he follows it. Next one, big move, goes sideways, 1020 holds, gets tight, looks to follow it. This one is a little bit wild, man, but he calls it a 6 star setup on a 5. Okay, well, still, momentum cycle holds, right? 1020. Honestly, I would personally not trade this, but what do I know? I mean, bro is successful. I'm not. What does he say? Okay, it makes a bit moves. It gets tighter and tighter. Okay, so after this move, it gets tighter. I bet he must have traded it here too, though. Anyway, goes from surfing the 10 to surfing the 20. Yep, still above the 20. Has a range that gets tighter and tighter. Okay, he means this. And a really narrow range by the day before the breakout. Okay, and then the breakout is on higher volume. That's perfect setup. All right, cool. So I guess this, I'm not sure if this is the one or not, but anyway, here holds the 1020, right, and then moves above. So I bet he would have traded it here, and here it does the same, pulls back above the 1020, gets tight, looking for some breakouts. What else is here? Okay, I bet he traded it here as well. Like, you can see what kind of stuff he's trading, right? He's just trading momentum cycles and he's trading the MMBs. He requires his MMBs to be above the rising 1020, which is the definition of our momentum cycle. So this is very, very interesting. Uh, yeah, all of this is just above the 1020, and that's what he calls the best possible setups. Anyway, here I have a few more insights. So he puts big emphasis on management. So he only has like a 25 to 35% win rate. And he said this super interesting quote that I loved. He said, "You have very little edge if you need a high win rate to make money." So he claims that having a lower win rate is the way to make money. And yeah, he aims for huge home runs and small losses, just like Anton teaches us, and there's no need to be profitable every day, of course. Like, he also says that the best traders are the best losers. What he means by that is they are the traders that have learned how to handle losses in the best possible way, where it doesn't bother them whatsoever. They just take their loss and they move on. The most important thing is that it's a small, constant loss. It's always just a -1, never anything else. And if we focus on home runs with a small win rate, we will outperform the market. Anyway, he's also risking very small, around 0.3 to 0.5% per trade. And his management, how it works, is kind of interesting because he closes one third to one half of his position after a certain amount of days. He doesn't have a BE rule based on structure or price itself, but on time. And I think that's so interesting because what he has noticed is that when it's a move that wants to go, it's gonna go within those 3 to 5 days, and that's when he takes some profit. And from there, it can either come back to break even and die off, and you get at least a small little winner, or it will continue, and that's when you make the big money. So this is something very, very interesting that I have never considered before. It's a BE rule that is based on time. And it's really cool because he's sharing with us something that he has noticed himself and made millions on. And he noticed that, like, after 3 to 5 days, we should take some profit because it's from here, it's either gonna die or continue, and we want to make sure we get something out of the move, even if it fails. So I really like this, and I'm gonna test it probably. And the way he trails, by the way, he trails with a stop loss close below the 10 EMA. So he says that one of the most important things, or sorry, most difficult things, is to hold a winner without selling, because our entire job is almost just to find a few big home runs in a year, and that's gonna pay for all of our costs and handsomely above, right? And I have some lessons later for that regarding that risk management and how holding for big winners is actually so important. Anyway, yeah, this was the lesson from Kolamagi. I remember quite a few more things regarding that, but I really want to get into the analysis, so let's not waste too much time here. Let's go to Tuesday. So it all looks bad, not even bothering with filling out the worksheet, okay? But it looks like I do take a stock trade. So after New York, I check in and I take this stock trade. All right, so let's get into it. TBPH. Is it TBPH? It is. All right. So on the weekly, I think this looks amazing. I really do. I mean, even if we look at the supply over here, right, this would be the stage one. We have a little consolidation below or at that level. and a strong, strong breakout higher. This is beautiful. This is like pretty clean and clear of what it wants to do. There's a momentum cycle. It's nice. So here, TBPH, right? We have a strong, strong move that goes sideways, and then breaks out on big, big volume. It's really nice. Here it pulls back. This looks like a beautiful MMB into the rising 1020. Of course, I would like to trade this on the 60. And what do we have here? Well, first DMB was over here, but that kind of failed. And from there, maybe I could have buy stopped this. I probably could have buy stopped this too, but I guess I wasn't online during that time or some shit. I have no clue. When was this trade taken? 1542, so right after New York Open. So it probably wasn't even possible to get into this. But yeah, here's the next high. It's an active momentum cycle. So yeah, I set up the buy stop and look to buy. And the last rule that I have is on the E micro. I want to see a reaccumulation on the E micro. I don't want to buy into an extended market. And what do I do here? Yep, this is most definitely a reaccumulation, so I am valid to put the buy stop. I think this trade was perfect. Yeah, this was really, really nice. Perfect trade in my opinion. Yep. Yep. All right. So what's this? State 1 breakout on good momentum. V is just good momentum. E is perfect. And management, well, nothing much. I just get tapped in and instantly fucked up. Honestly, I have noticed this happening quite often with stocks. Like there is a high, I look to get involved on the breakout, it just kind of liquidates and fucks off lower. It has happened many times to me already, and if I continue noticing this too much, maybe I'm gonna explore a rule to get involved after the first fake out or something. I don't know. Or maybe not, maybe this is completely normal behavior and I need to take these kind of trades in order to catch the big winners that are going to pay handsomely for all the losses and like significantly increase my EV. So yeah, I might need to test this a little bit. Okay, well that's a -1, but it's completely fine. I think this trade was perfect. So the decision to take it was good. Nice. All right, perfect. Moving on. So that was Tuesday. Let's go to Wednesday. So some kind of news at 8 p.m. But yeah, I never trade that late, so it doesn't matter. So I am watching silver here for the same reasons as before. No need to change that. What is this? Is this yeah gold? I didn't tag that. Gold for the same reasons and UJ for the same reasons. So same watchers the entire week, and I do have some stocks here as well. So had to leave around 13:00 and only got back to the PC at 16:10. Yeah, and because of that, I missed quite a bit of trades. But I'm gonna backtest the session and include things in data collection. Yes, I did backtest it, and there's 3 trades that I missed and didn't take. I wonder if I would have actually taken them or not. It's just that I think I would. And then when I came back, I still had another trade on a stock, I think. So let's get into the trades themselves. So this is UJ, right? On the weekly and daily, I already agreed that this is something that I want to watch. So yeah, this is my EVCC. All right, so this context looks amazing, right? I mean, there was a little bit of chop over here, but from there it got really strong, reaccumulated, and now strong move, pulled back into the rising 1020, breaking higher. We can see on the 6 minute, very, very strong move, clear reaccumulation, some lows got liquidated, right? Boop. Okay, I even looked to trade it here, which is perfectly fine, in my opinion. So here it loses its momentum cycle, so definitely reaccumulation. And the moment that happens, I'm looking at, okay, where did this come from? I can even see that on the 1 minute. And this wave of selling most definitely came from this place. So I waited for a break higher there, and yep, sure enough, it breaks higher on pretty good momentum. And what does it do? Is this already? No, this is the 1 minute. So strong move above. I'm expecting continuation, definitely. Pulls back into the rising 1020. And here I'm looking for a trade. So let's check it out. Very strong move. Somebody pressed the buy button. Beautiful. Some kind of demand gets built up and breaks through. We are now in reaccumulation. Where is that coming from? Well, probably looks like somewhere over here, right? I want to see price go above here in order to yeah, here again, I was just greedy. I was looking at this and I was like, oh, maybe I can get involved a little bit sooner. No need. Like, it's this point. I want to see a move above this point. And it moves above, pulls back into the rising 1020 and creates a beautiful DMB inside. I think this is a perfect trade. Beautiful trade. Absolutely love it. If all of my trades looked like this, I would be happy. So, yeah. Didn't take it, but it ends up being a break even, I think. Okay, so here it goes higher, not enough strength for me to break even or anything. And as it liquidates this high, I move to risk free. And sure enough, a few seconds later, right after I do that, it fails. So beautiful management here. Nice little BE. So C2, everything here is in good momentum. That's most important. And a perfect entry with perfect management. Very, very nice. Okay, moving on to the next trade. Looks like UJ still. Okay, I'm following this market. So what happened? 6 minute broke up higher. Okay, let's go to the 1 minute. That's probably gonna be nicer. Uh, okay, just seeing what happened here. So previously the trade was here, I believe. Here it fails, reaccumulates, goes higher. I bet I looked for some trades. Okay, and here as this is moving higher, let's see how it looks on the 10-second. Okay, so we definitely have MMB1 here, and this whole thing is MMB2. Here it moves higher. It's still in MMB2, and here I take this setup. Ugh, I don't know about this one. This one looks a little bit weird. All right, I'm back. I paused it real quick because I had to go to the toilet. So let's see where I ended. Okay, so I ended on this UJ trade over here, which looks good on the 66 and the 1 minute. 1 minute getting a little bit choppy here, not gonna lie, a little bit, but I understand why I would want to get into this waves reaccumulation. So here what I'm arguing is, okay, strong stage 2, makes sense, valid to look for a react over here. I would definitely take an entry here if I got one. I didn't quite. Instead, we got this little thingy, this liquidation. So here, yeah, this is kind of weak already, but at the same time, I still understand why I took it. That being said, the DMB itself does not look very nice. The EMAs are not really rising, so I think I forced this one. This one sucks. I don't like this. The E looks very different from how my good E's look like. Ugly entry. Very ugly entry. Mm. An entry over here was completely valid, by the way. If I had gotten an entry there, I would have taken it. Hmm. I'm also gonna say EMA is not rising. Whoa, what the fuck? Okay. So I'm gonna call this one a mistake. That being said, the context of the trade itself was really nice. So all of this was good. C1, it's just good momentum. Ugly entry, ugly Y. Is there anything regarding EMAs? Nope, there isn't. So I'm just gonna write it down. EMA is not rising. Make that red. Okay, and management-wise, so I get in, and after this fractal little reaccumulation here, I break even. Makes total sense. And wow, this almost went to target, but I didn't quite get into it. So yeah, ultimately, this was a mistake. Okay, the trade itself was a mistake, but the decision of me not taking it, well, I didn't take it for different reasons. I wonder if I would actually take it live if I was sitting there. There's a chance I would. There's also a chance I wouldn't. It's uncertain. But either way, it's good that I didn't take it. So this is not considered a mistake overall. Okay. So moving on to the next trade then. So this was a mistake. So one more UJ trade. Okay, same context. What's happening here on the 1 minute? So here we had a little bit of a congestion. Wait, what? Isn't this the same trade? Hello? Okay. This is a gold trade. What? Oh, I must have copied the wrong trade then. Okay, well, cool. Let's delete this and put this inside. Still, fuck. Still a bit sick, by the way, but it's better. It's better. Put this in the middle. Okay, cool. So this is a gold trade. Cool, cool. So gold, we already know that it's in relatively good context to be followed, right? And on the 1 hour, I do see some kind of downtrend that has its supply over here, and here we see a breakout. I really like this because here I would be like, maybe this is just going to be a distribution and it's going to fuck off lower. But here on this candle, it really, really shows the intent to go higher. I like that. So here on the 6 minute, what do I have? I expected this to be the distribution and we fuck off lower, but here we break out with very, very strong momentum. I love this. So here, I guess, so yeah, on the 1 minute, definitely a viable or strong momentum cycle. So here I'm going to look at the 10-second. That's the entry. Very, very strong stage 2 move, right? Okay, so here it breaks down. And what does it do here? What? Huh? Huh? Oh, okay, it's a 1 minute entry. I see. It's a 1 minute entry. That makes sense. Okay, so here on the 1 minute, I'm arguing, okay, we're breaking out of this stage 1 over here. This is MMB1, and inside that MMB1, I'm taking the ICI. Yep, that makes total sense. Yes, beautiful trade. I love this trade. Very, very good. And if I look at what happened structurally on the 10-second here, so we did start losing some lows, right? We reaccumulated. Then what do we have? We have a beginning of a move higher that goes lower, creates a higher low, and here as it breaks into a higher high, I'm looking to get into the trade. This is beautiful. I absolutely love this. Also, it comes back to the demand here and has a strong reaction. This is doing everything it should be doing. This is beautiful. I love this trade. So stage 1 breakout. Good momentum. Well, it's always on good momentum. 1 minute. What's going on here? Fuck, sorry about that. I see. This is it's like this. Okay. Because the entry is the 1 minute and the entry was perfect. Okay, management wise, what happens? Breaks higher on like big move, right? Of course I'm gonna reduce risk here. I'm just reducing risk. I still have 50. I think 40 is the spread. 40 spread of risk here. As it does the fractal structure and goes higher, I would be risk-free, and a little bit later it comes back to break even. Okay, so management-wise, that would be perfect as well, meaning this would be a perfect trade, and it would be very good. I didn't take it though because I wasn't trading for a good reason. I couldn't trade. Life happened. So overall, it's not a mistake. It's good that I didn't take it. So that's very nice. And last trade for the day was a stock trade here on OMA. Okay, and I got into it with a limit before the BE rules. Okay, 1 sec. All right, what do we have here? So weekly, I mean, stage 1, right? Big breakout, reaccumulate, active momentum cycle, big bonker move. There's nothing here to add. Okay, 1 day, maybe I could have given it a little bit more time. Maybe this is a bit too aggressive because this isn't an MMB at all. So here, yeah, I mean, here I would have just looked for like an ICI of sorts. So on the 5 minute, I have all of this nonsense. I have all of this stage one, a strong move, a breakout, right? Liquidates all of this. If it wanted to fuck off lower, it could. And here is an entry through this high. I honestly think this is beautiful. Like, if anything, maybe the daily is a little bit sus. Maybe it's a bit inconsistent. It's a bit too big of a move, and I should not follow such a move. I'm not sure. Like, maybe this didn't have enough time to reaccumulate, but then again, this is the hourly, right? So I can see this happen in 4 hours, and this is like, this is much more. This is like 8, 10 hours or something. So this was a really quick move, and it did have time to reaccumulate, and it looked like it wants to continue. So I think this was a good move. I really do. I don't necessarily have a problem with this trade. I'm gonna ask my buddies what they think of it. But yeah, I think I'm gonna call this a perfect trade. But yeah, that taps me in and pretty much instantly fucks me up. So that's a -1. Unfortunate. But yeah, this is most definitely good momentum. V is good momentum, but maybe inconsistent. Maybe inconsistent. Hmm? Do I have that? Yeah, maybe inconsistent. And and here we are on the entry. The entry, well, it was almost like a 5-minute entry here, but yeah, I just zoomed into the structure to see what's going on. I think the entry was perfect, but yeah, momentum cycle still active. That's what we want to see, right? Yeah, I don't see a problem with this trade. Management-wise, there was absolutely nothing to do. So overall, I think this was a perfect trade. Decision was good. All right, so here I wrote, looks like I missed quite a few BEs. Yes, the trades that I missed on, what is this, Wednesday, were all break-evens, but they were all perfect trades, I think. No, the UJ trade was actually not perfect, of course. Yeah. Okay, so that's Wednesday. And lastly is Thursday. So some news at 2:30. Okay, so I did have my alarm set for that. Cool. And here's what I'm watching. So once again, I'm watching UJ, still very bullish. I'm watching silver. Yep, still in the momentum cycle. I'm watching gold. A little bit weaker, but if money came in, I could watch it. And I'm watching some stocks as well, especially ESTA. That was my main watcher. And some crypto. Yeah, I'm still looking at ZAC. So how is this going to look on your mirror board? You know you want it to be perfect. Yes, this is what I talked about in the beginning. Just like I added into my template this do not make mistakes to see it in front of me every day, I'm also going to, well, I already did include this in the template, and this is going to uh, come in every single time, every single day. Because here during batch analysis, I always ask myself the ultimate question, right? If I could take this entry right now, would I take it or not? And that usually like tells me whether it's a mistake or not. And I can pretty much ask the same type of question while live executing. I can ask myself, hey, is this something that I want to have on my Miro board or not? Because I know from experience how strict I am with myself when I do these batch analyses. I know that if there's something that is sus, if there is something that looks a bit like a mistake, I am going to see that during my batch analysis. I am going to label it as a mistake, and I am going to, well, be a little bit pissed off at myself for making that mistake. So just like there's an ultimate question during batch analysis, hey, would I take this trade right now? There should be an ultimate question during live execution as well, and that is, hey, do I want to have this in my Miro board? Do I want to have this in my collection of trades? Do I want to have this on my track record? Because ultimately, I need to hone my edge. I need to only take those things that do not have mistakes. So I'm going to try my best to ask this question myself every time I take a trade. And I think the reason why I wrote it down here is because I'm going to have quite a few trades that I thought were mistakes. So yeah, I'm going to try to implement that. I think it's a good one. So London looks trash. I did follow UJ a bit, and yeah, I wrote that ZAC looks absolutely insane. Like, crypto is currently crashing and burning. Everybody's losing their fucking minds on crypto Twitter, but ZAC is just chatting, doesn't give a single fuck. Anyway, I need to drink a little bit. My throat is so bad. Now I finally understand what Anton means whenever he's sick, he's like, "Oh, my voice is so bad, like it hurts him." I haven't been sick for like 2 years, and I got sick yesterday, and holy shit, I'm talking for almost an hour already, and it's ugh, it hurts. It's bad. Mm. Anyway, we're close to finished, so let's take a look. I do have two lessons here, so let's. Oh yeah. This lesson. I think this is a absolute game changer for me, and it has a lot to do with FOMO, like really, really sneaky FOMO that I did not know I had. So here's a little lesson on reaccumulations. So I just blasted an insane bong. And it's always how the good lessons start. I did smoke a little bit of weed, and I was looking at price, and all of a sudden I had an idea, and I was like, wait a minute. Wait a second. And I just had a thought, and I think it was a good one. So, look at this reaccumulation, right? So, I got some insight. When you look at this chart and you see that supply, I'm referring to this supply over here, it's quite high up, isn't it? Doesn't that make it feel a bit like the free money zone isn't there and that there won't be opportunities probably? Well, check out the 6 minutes, for example. So, here what I'm saying is like, whenever this supply prints a high like this, I know that I need a strong breakout through that supply to look for trades. And what I'm talking about is whenever I see this form, I already feel a little bit bad, because I feel like, fuck, man, like I have so little opportunities. And when something is finally looking good and the preceding stage two is good, and I want to get into the reaccumulation and I want to trade, can you feel the FOMO, like FOMO charged speech here? I want to trade. Well, and then I see this and it almost like disqualifies me from trading. I feel a little bit disappointed, right? I'm like, fuck, man, I wish I could trade. And then I talk myself into trading lower or some shit. Well, this lesson is one that will show me that there is absolutely no need to FOMO because this is a 10-second chart. Okay, let's for example look at the 6-minute chart here. So this is the same type of price action. Okay, so we had a big preceding stage two move. It's UJ. It's all in a very bullish context. We have a momentum cycle, and now it's pulling back. Right? You can see the tiny little red zone over here. That little red zone is that supply zone that I marked up that I'm saying is too high, right? And it doesn't give me opportunities to get involved down over here. Yeah. Well, let's continue. And now I dare to draw in a move I've seen play out probably hundreds of times by now on the 6 minute once again. So I just draw in this move. And this doesn't necessarily, like, maybe this looks a little bit overextended now, okay? I get it. Maybe it does. But that's not the point. Like, imagine that this whole thing happened a little bit lower and it wouldn't be overextended. I would have the same feelings regarding the supply zone printing higher. That's the focus of this point, the supply zone over here. But anyway, you have an MMB, and from that MMB, you have a move that goes this far. I know for sure that I have seen such a move play out so many times. So many times. Like, look, there's one right here. Like, there's a pullback, and from there is this huge move, right? I've seen this so many times. And when this stuff happens, on the way, it does present opportunities. And I do not need to get involved all the way on the bottom over here. So, look how far this goes, all right? What else do I write? This isn't too unrealistic, is it? So if I now mark up the entire zone below the supply, which is the stage one, we really don't have to care much about the fact that we couldn't get in nice and low. So here I put next to each other the lower time frame, let's say the 10-second, the 1 minute or whatever, and the 6 minute, which is our validation time frame where we look for our momentum MBs. And even if this goes sideways a little bit, creates a stage one, and then breaks out higher, like, just look how much opportunity there is on the 10-second. I might be able to get in over here or maybe even over here, and it doesn't tap me out because it's a shallow pullback, and then it goes higher, and that's only this leg over here, and there might be more opportunities on the 10-second. There might be an opportunity here on the 1 minute. There's so many opportunities still, but they're only gonna be presented if demand overpowers supply in the current reaccumulation, which we already know this is a reaccumulation. Supply did overpower demand over here. Cells are in control over here. And now we don't care what happens here. We do not want to get involved in a market bullishly if cells are currently in control. And we have a clear level that tells us, hey, if price breaks above this level convincingly, it's going to tell us something. It's going to tell us that demand is once again in control. And that is the green light for me to trade. But the point here is, I was still panicking about this tiny little supply zone. But on the bigger picture, on the V or even on the C, it's so tiny. It's so small, and there is so much opportunity above. So having a rule that keeps me out of these areas is extremely good for me. It's not a rule that limits me to get in from the lows. I know that we are like psychologically wired, and Anton talks about this a lot. We are wired to want to get in at the bottom and sell at the top, right? That's like this perfectionistic urge, or I don't know, like it's this psychological mental shenanigan that we want to get in at the bottom and sell at the top, like this perfectionism coming in or whatever. But there's no point, especially if we understand how price moves and we can see that we can zoom out and it all makes sense all of a sudden. Like, why would I get involved down here? Anyway, what else do I write here? Because there will be plenty opportunity above. That's my point. I always feel bad a bit when I start stalking a beautiful move and it reaccumulates in this way. I guess some sneaky FOMO. But the point is, I don't have to worry at all. These rules are here for a reason and they serve me. They filter out so many trades that were not ready and were stuck in stage 1. Yes, this is the entire fucking point. It was stuck in stage 1. These rules help me to not get involved in such places. So it just brings home the point that we don't have to get in from the lows. I guess that's what every beginner wants to do. And here I would also like consider myself a beginner because even though I'm forward testing for almost a year, I think that's still almost beginner level, right? And the marked up 10-second supply looks so high on the 10-second, but the bigger picture clearly tells us that there is plenty of room to go. Anyway, just some 420 thoughts. Yes, I'm so happy that I noticed this because you can only start working on bad habits once you have awareness of them, once you can realize them. And until this week, I really didn't know about this sneaky FOMO that made me feel things during these areas here. But now I have clarity. I know what I want to see, and I know why I want to see that, and how it contributes to my overall profitability and success. So I will be implementing these rules. I will need to instill them a little bit more. Maybe I'm gonna like put myself through some exercises, like drawing in these things in the upcoming next weeks. So I always have sort of a checklist of what needs to happen. Because right now my rules for trading reaccumulations are really like checklist based, and that's beautiful. So I have a bullish move, right? A strong stage 2. I want to see demand fail. That's the first, like, okay, first checklist item, strong stage 2. Second checklist item, demand breaks. Third checklist item, uh, supply breaks again, which proves to us that demand is in control again. And only then am I allowed to trade on the E. So, yeah, this is such a beautiful simplification. I absolutely love it, and I'm going to try to stick to it. This should filter out so many unnecessary trades. Whew, I do talk a lot today, don't I? I bet I'm already like 1 hour in or some shit. Let's see. 53 minutes. All right. Decent, decent. Okay, moving on. There's another lesson, and this is things I want to see on the screener. So I've been playing around with the screener a little bit, and I also got a little bit inspired from Koala Maggie and how he actually screens. And what he looks at is like the 3 month, 6 month, and 12-month charts, I think. And by that, I don't mean that it's a 6 month, like one candle is 6 months. No, no, no. It's like a chart where you can see only the last 6 months of price action and nothing before. Okay. So I think I did that here. I did my regular filters with like the EMAs of the weekly and the daily and all of that stuff. And I got, well, I can actually show you. It's going to be very easy. So if I go over here and I go to my stock screener, right, and I do, for example, this, and I go to the change, I always sort by monthly change, and then I go to this, and I can see all of these charts here, right, and I look at the last 6 months of what price was doing. And here, this is like my last part of manual screening, and here I just look, and I just right click and flag anything that I want to see. So here I have 98 total. Um, could probably be even more. Uh, oh, I didn't save it. That's why. Okay, so I'm also looking at the average daily range of at least 2%, maybe even more. I don't know, but I did make some changes and I forgot to save them. Whatever. That's not the point of this. The point is, I already know by now what I'm looking for at this 6 month view, so that I can very quickly screen these 93 thingies and just manually screen them. So this is what I like to see, right? It's about a strong move that pulls back and starts moving. So frog has some kind of whatever, strong move, pulls back relatively shallow and starts moving. This is beautiful because on the 1 hour, we're going to have the DMBs. This one, AU, strong move, goes sideways, starts moving. This one, strong move, goes sideways, starts moving. This one is a little bit like, it looks like there's going to be some kind of stage one here. It's not really like a momentous bounce or whatever. Here, same. Strong move, goes sideways, starts moving. Strong move, goes sideways, starts moving. And I'm sure I would be able to find many, many more examples like this on the 6 month view, but I don't have to. I already know what I'm looking for. So this is going to make it much more easier to find these opportunities quickly and to possibly also screen from a bigger data set and not necessarily be so strict with the rules, because like especially when it comes to like market cap and volume and stuff like that, because I can very quickly manually screen 100 items and I can be done with it in a few minutes, and I just flag everything, and then I go into here, I go into my view that I need to see. So I would go into this crypto view, which has the weekly, daily, 60 and 5. I would go to the red, I would go by change, and from top down, I would very simply look at the 60 minutes and just be like, okay, good, good, bad, bad, whatever. And I would very quickly filter through it and go from red to green. And that's what ends up on my final checklist. So that was just a little bit of process refinement regarding screening, because screening is a huge thing when it comes to stocks. I already have a very solid process on how I screen on crypto, but now I'm refining my stock process. So yeah, that's that. And we have a few trades here. So I have a stock trade on AU. All right. So let's get into that. I also have a Alma trade here. Why is that not here? Mm, wasn't that on Wednesday? What was this? Oh yeah, that's the Alma trade. Okay, and I think that was perfect, wasn't it? Yeah, that was perfect. Okay, so boop, perfect. By the way, what about this gold trade? What did I say about that? I already don't remember, man. Yeah, that was perfect too. Cool. Perfect. Nice. So now we go into AU. Weekly, very bullish, rising, clear as day. What do we have here? Daily. Okay, so we have like clearly moving higher. Stage one here, stage one here. Since then, higher. Okay, reaccumulates here. Some demand breaks, very nice. Supply over here, breaks higher, pulls back, beautiful MMB. Looking for entry here. Okay, strong move. Reaccumulates, goes higher, creates an MMB, and goes higher. I think this is perfect. And on the 5 minutes, I can see this is the higher move, and here it reaccumulates. Yes, beautiful. This is such a nice trade. I love it. Good stuff. Uh, let's go back to Thursday. Yep, stock. Here we go. So got tapped in with a limit. Yep. So I didn't get in as it opened. Maybe it gapped even or whatnot. So I got in with a limit. and it ends up being again just a tap out, but that's fine. So anything that stands out here? Nope, not really. So C1, good momentum, good momentum, perfect entry. Management wise, there was really nothing to do. I just get tapped in and instantly fucked up. So perfect. So one thing that comes to mind regarding these stocks is that Koala Maggie only trades the stock market when the NAS 100 or the Nasdaq or whatever is in a momentum cycle on the daily, which would currently not be the case, right? So I might actually like just straight up take him up on that and filter out even more, because if I take a look at NAS 100 right now, like the weekly is still in a momentum, but he is looking at the daily, and the daily, if anything, is in a momentum cycle down right now. So all of these trades that I have taken in these past 2-3 weeks that I traded stocks, it was all invalid basically, because well, the Nasdaq, the index, was not really in a bullish momentum cycle. It was reaccumulating. So all of this could technically be avoided if I stick to that rule. That's just something to think about, and I think I'm really going to implement this because it makes so much sense. I love how simple his approach is and how well and clearly defined he has his rules, and that's going to also apply to crypto versus Bitcoin, right? Anyway, this was perfect, and the decision was good. All right. So no reflection. Cool. And that's it for Thursday. And on Friday, I got sick. I got giga sick. No trading today. In bed all day. Yep. And now we have Saturday. I'm feeling a little bit better, so I'm doing my batch analysis. So here we are. Okay, that's it for this week. So let's go to analysis here and let's check out what actually happened. So this week table overall, wow, minus 4.8. That is rough. So let me fill out my forward test here. So only the things that I actually took. Okay, so November 18. November 18. What was this? This was a stock. There's going to be another stock lower on November 19. Okay, what's the time? 1542. 1542 minus 1.2, right? That's a loss. Yes. This one, 1645. Okay, minus 1.2. That's another loss. Okay, then I have two lessons. I have another stock that was taken on November 12th, 20 at what? 1603. That's also a minus 1.2. And I took a UJ trade on November 20 at 1644. That was also a minus 1.2. Okay, so I got pretty fucking wrecked this week. Well, both weeks, both last weeks. Wow, big bad. What can you do? Oh, by the way, what about this UJ trade? Huh? What is this UJ trade, man? Hello? Did I already look at the UJ trade? I think I didn't. Yeah, I didn't. My bad, my bad. We still have a UJ trade to go over. Okay, so last trade of the week is a UJ trade over here. So, 60 looks good. Pulled back. Active momentum cycle. Looking kind of decent. And here we have some news coming in, right? I argued that maybe I should not trade this day because they reopened the government and whatnot, and it was the first big news of the last, I don't know, 2 months or something, and it caused this, right? Darth Maul entered the chat, fucked everything up, both sides, and I was like, okay, well, I don't want to get involved in this range, but if it breaks into a new range with momentum, I might look for continuation. And here, sure enough, what does it do? So this is the whole range, right? Blah, blah, blah. And here it's consolidating below, and my thoughts are, okay, if this breaks out, I can get in here and look for this continuation. And sure enough, that's exactly what I wait for, and I wait for a strong breakout. But honestly, Honestly, I don't think it's valid to wait for a 10-second breakout over here and just take up one big 10-second candle and say that's a breakout, right? It needs to be relative to how big the range is. And if anything, I should maybe look at the 6 minute here, and I should wait for a big breakout candle on the 6 minute. That would make so much more sense, and I could then get involved on the move that has happened. So it would do something like this, and then I would get into the reaccumulation. I think this was way too early, and I think this was forced. So I'm going to call this a mistake. Um, yeah, wait for strong breakout on the 6 minute, I guess. Yeah. Okay. I think this suck. I saw it has a strong breakout with potential for continuation. Like, I understand what I'm doing here, right? I'm trying to get in as soon as possible as price is potentially breaking out of the range. But again, I don't need to be the first in the move. Like, these are the perfect areas to trap traders. I do not need to participate in these moves. I can wait a little bit and get involved later, or potentially avoid an absolute shitload of losses. So that's why I am going to call this a mistake. And it goes hand in hand with last week's lesson, which was to wait for stronger breakouts. Like, that has been a bit of a problem of mine because we never really, like, in Anton's mentorship in MentFX, we never really like focused on strong breakout as a concept, right? We kind of get in with the DMB or whatever. We don't look for strong breaks of certain levels really. So I didn't pay attention to that, but in the past I did, and it served me really, really well. So I'm gonna get back to that. And now I have clear levels that I usually want to see broken out of. Those levels are supply zones within reaccumulations and range extremes that are created with like some kind of inefficient price action, like news, right? So yeah, that's definitely actually something I'm gonna write down here in the lessons because there's quite a few lessons. So strong breakouts out of what? No, not out of, but through Sup- supply zones within reaccumulation. What the fuck? Supply zones within reaccumulations and range extremes. Yeah, range extremes. For example, inefficient ranges created through news. Okay, so that's definitely one lesson. Another lesson was regarding screening, and I might fill out those a bit later. I, yo, ADHD is strong here. I need to get back to this. So this trade was, what was it? How am I gonna even call this, man? I mean, yeah, look, the context was definitely strong, right? Yep, definitely strong context. The C1, yeah, this is where we start having some mistakes. It was ugly. Ugly why? Uh, do I even have anything for this? Well, yes, I'm gonna call it too early. The same goes for the 1 minute. It's gonna be ugly because it's too early. And the E was really nice, but I should not enter within this area. The E was nice. I liked the E. Strong move and a little ICI inside. Yeah, this was a really, really nice move. And that taps me in and instantly fucks me up. But yeah, management wise, nothing. So it was a mistake because I got involved too early. Makes sense. All right, now I have everything labeled up, and now everything should show up the right way. So overall, I'm down minus 4.8. So let's do that. That's rough. And let's see how it would be if I traded perfectly. I would be still down minus 3.6. Okay, that's not too bad. So I accumulated only 1.2 R of mistakes, so just one single trade that was an actual mistake. Other than that, I traded really well. I'm surprised. I thought there would be many, many more mistakes this week. Honestly, going into this, I thought this whole shit is going to be just mistakes. So overall, I'm actually pretty glad. So what kind of mistakes did I have? Yeah, I just got involved too early on this. Cool. I'm going to make a note of that. So, um, uh, got involved too early. Let the range break out properly first. Boop. Here we go. And maybe some drawings into it. Yeah, yeah, yeah. All right. Cool, cool. So that's that. And what went well? Followed rules well. Definitely. Like just one mistake. I'm pretty happy with how this went. So no problem. But let's one more time reiterate what I talked about when it comes to the reaccumulation, right? So if this is the 10-second and I have a beautiful move and it starts reaccumulating, well, actually, sorry, I have the 10-second and then it does something like this. That makes it so that this is a supply zone, right? And I need to see a breakout through that. So no matter what happens here, I don't really care. Only after it breaks out strongly is when I'm actually gonna start following again, somewhere from here. And in the past, I would feel really, really like I would feel FOMO, and I would like to get involved here because it felt like the free money zone is only this, right? And therefore, I don't have any opportunity. But actually, if I take this 10-second and I prorate it, or and I zoom out and I go, let's say, to the 6 minute, what I will see is a big move that goes sideways, and then let's say it puts in another big move. This is where the supply is, right? And this is the MMB. All I do is I filter out this little bit, but I'm able to trade all of this. Okay, like here it would probably already be overextended, so I probably wouldn't trade this. But all of this, if I look now back into the 10 seconds here, what is that going to look like? Like, okay, so this little thingy is this little thingy. So if I look at something this big, I would probably say that's going to end somewhere here, maybe even higher, maybe somewhere over here. Okay, so I'm going to have a move that maybe does something like this, maybe some kind of stage one again, and then goes higher, 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 maybe something more, boop, 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 and then fucks off, right? All of this is still available to me if it wants to go. And there is absolutely no point for me to look for entries down here. This is the biggest lesson that I have for myself today. So yeah, I know this is quite a lot of stuff here, but what the fuck? No, no, come back. All right, yeah, I'm gonna keep this drawing here. So this is the biggest lesson for me today. I do not have to feel FOMO over here. No need to feel FOMO. No need to get involved in this area when, if everything goes well, this entire area is going to be available to me. No need to feel that FOMO. And if this is actually what I suspect it to be, that I have unveiled some sneaky FOMO, then this week has been an enormous, enormous success because I'm going to feel very good about my trading and about my rules. The worst thing for your mental health and for your let's say psychology aspect of trading is when you do not like how your rules limit you and it causes some friction. Well, this is meant to do it so that I don't actually feel friction, but I rewire it to a way where I'm very happy to apply these rules because they keep me out. It's not that they prevent me from winning, they prevent me from losing. So yeah, I know this is a long video, but I always go very much in depth with all of the stuff that I want to go through because this is my sacred honing time. This is where I sharpen my axe, and this is where I get better. Throughout the week, I'm just executing and I'm writing down lessons that I can later now review and learn from them. So I did have a lot this week, but that's completely fine. All right, I think that's it. How long is this video? Sheesh, 75 minutes. Okay, bye.